Alright, you know what we say, 5 minutes a day over time, being consistent every day will make you dangerous. So let's see what's going on. You can see a peak right here. I haven't paid attention to this before on the pre-markets, but it doesn't look good on the Dow. And so I'm gonna, in unison with this, I'm gonna go here to why stocks could get slammed soon. So let's look at this one here, see what they're talking about. I'm not gonna touch the Ray Rice. I saw that down there, but I'm not touching that. Alright, why stocks could get slammed soon. Stocks could stumble and immediately lose several percent if the speculation about the Fed dropping some of its dovishness. Man, I'm learning my vocabulary, y'all. From its post-meeting statement next week comes true. Strategists say, I don't think it's more than a couple percent, said David Bianco, chief U.S. economy strategist of Deutsche Bank. The speculation of the Fed could remove the language about keeping rates low for a considerable time has been contributing to a rise in bond yield as treasuries sell off. Stock traders have been eyeing those moves. Through the Fed, watchers are divided on whether the language will be changed when the Fed releases its post-meeting September the 17th. Okay, so they're basically talking about raising interest rates, which is going to hurt the housing market, which is also going to help hurt the job market. So that's not a good thing. Last portion here I'll read. A change in language could start the clock ticking on the Fed's first rate hike. According to some strategists, southern markets would likely put a time frame on 6 months before you have such a move, which would change the market expectations on the first rate hike by several months. Now it's most expected at about mid-year of the third quarter of 2015. So they're talking about sometime around this time next year, I guess, that they'll have interest rate hikes. James Paulson, chief investment strategist at Wells Capital Management, is in the camp of those who expect the Fed to alter its phrasing next week. He also expects to see several percent decline in the stock market as a result, and that's what we just got through seeing. So be on the lookout for that. I want to read this part here too. It's already happening to some extent. Bonds have repriced by 25 basis points and stocks are struggling with it, he said. The S&P saw its worst decline in 5 weeks Tuesday, by stocks bounced Wednesday. Stocks bounced Wednesday as a technology share rallied on the back of the 3.1% rebound in Apple, and the S&P 500 finished the day at 1995, up 7, while Nasdaq climbed 0.8% to 4,586. I'll stop there. So let's go ahead and jump into the pre-markets. So I'll be looking for the language of the Fed on the 17th. I think the 17th is next week, Monday or Tuesday or something like that. So I'll be looking at if they change their language, because if they do, that's just a small indication, kind of like Groundhog's Day. It's like an indication that seasons are changing. So interest rates, unfortunately, will be going up if that's the case. So let's look at the pre-markets. All right. Yeah, just like it showed, they're down 34 points on the Dow and down about 4.5 points on the S&P. Wow. This is not looking good. Currencies look okay, but everything else in the sectors and the indices don't look bad, but excuse me, everything else looks horrible. Wow. All right, let's go over here to my portfolio. One of the things I did yesterday is I bought the Google, and I bought it at $578 a share, and I'm at $582. So that thing rebounded pretty good. So I may want to dump Google. Let me go back in here. Let's see what their target. They don't have a target estimate. Go figure. All right. Interesting. But it looks like the day's range was up to 583.50, and the height of this 52-week high is at 604. So you may see me do a quick move on this. So yesterday I made basically almost 1%. I made $852 yesterday on 200 shares. I'm gonna actually sell this. I'm gonna get out of this. I may want to ride it more, but I'm not going to do that this time. I'm going to take my profit and get out. So we'll go ahead and make that trade and sell. I'll keep my eye on that, but yeah, I'm selling that, and then there's the other one. Now, of course, you can have some stocks that you buy and hold. I mean, like my Procter and Gamble down here. I mean, I'm up $4,000. So yeah, I'm definitely not going to get rid of that anytime soon. Here's the other one, Nasdaq. I made money on Apple. I bought it at 9. I thought I bought it at 97, but it must have opened up higher because I tried to get it at 97.81, but I ended up buying it at 98.08, and it's up to 100. And I want to let me look at the ask on this one, then I'll be done. So the target's 106. So right now I'm at one. Go back. I thought I bought it at 90. I ain't happy about that one. I thought I got it at the previous day close was 97.99, and I ended up getting it at 98.01. But anyway, I got I'm at $100, 121. So if I can get that up to about 102, maybe even 101, then I'll sell that and buy something else. All right, that's pretty much all I got. Have a great day. Remember, 5 minutes a day over time will make you dangerous.